Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. It's October 26th. It's only 3 days before my birthday. I'm getting really excited about all of this. I'm going to be 52 years old in a few days. I want to thank everybody for the wonderful birthday wishes, for liking, subscribing to our videos, and for posting comments below in the YouTube channel. I really like when you guys do that. I actually go after the morning video, and I review all the ones from the previous day, comment, and I get a happy face afterwards. Like that. You see that? All right, let's get into today's session. It's about 8:06. The market's going to open up in about an hour and 24 minutes. The Dow's down 42 points. That's not where the problem is. The problem is right here in the NASDAQ. And let me show you why we're having a problem in the NASDAQ. It's one of those show and tells. You'll be able to understand it immediately. Google is down 6% before the opening, and Microsoft is down let's see here, about 6% at the opening. And as you know, those are two big FANG stocks. Both of them came out with earnings. They were not better than expected. Actually, one of them was better than expected, but forward-looking statements were awful. The other one was worse than expected, and the forward-looking statements were awful. And that's a big surprise because these two companies are very careful about what they're reporting. Now, looking at the agenda, you've got wholesale numbers, you got new home sales, international trades and goods and services is the big report, and then followed by home sales. But I'll be very straight and very honest with you, as I usually am. Most of the trading session, especially when you have such big stocks, is going to be determined by the NASDAQ. Now, I'm going to tell you something very interesting. I know the market's going to open up down today, but the bond market is still taking us higher, as you could see here. And typically when the bond market goes higher, we tend to have upside in the U.S. stock market. So although we're opening lower, don't be surprised if we huffed and puffed, maybe went down a little bit, and then shrugged it off and went higher. If that happened, it would be very big clue that the U.S. stock market is in fact starting to regain strength. So just because we're opening down on the NASDAQ almost 2% doesn't mean we're going to stay that way. Matter of fact, we were down there yesterday and we went up. Matter of fact, we haven't been seeing that much global turmoil or U.S. markets being impacted by global turmoil. So the fact is things are getting better. My suggestion is to watch these two stocks like a hawk into the day because there's going to be a lot of volatility. And this is not a time to initiate new positions till we have a little bit more certainty. Now, in terms of stocks that are coming out today, today's a big day again. We've got, let's see here. You've got Boeing. You've got Bristol Myers, Ford, General Dynamics, Harley Davidson, KLAC, Kraft is coming out, Masco's coming out. A lot of companies are coming out with earnings. Meta Platform, that's right, Facebook. That's a pretty big one. I didn't even know about that. Ryder System, Seagate, ServiceNow, Spirit Airlines, Thermo, Upwork, Waste Management, Wingstop. Now, tomorrow, this is tomorrow, I believe. Let's see here. I believe this is tomorrow right here. Yeah, this is for Thursday. Here we go. Thursday, tomorrow, we have Apple and we have Amazon. Now, it'll be very interesting to see if Apple and Amazon can get it together. They're looking at earnings of 29% less earnings per share year over year. That's baked into the stock. So that's pretty good. Apple, they're looking at $1.27, 2.4 up for the year. And I think Apple's going to outperform. Not sure about Amazon. Amazon may be an issue. But right now, earnings are big. And that's what's really driving the market. Interestingly, if you look at volatility, we're below the 28.53 level. And if it continues, if we get a little rally today, we may start seeing more downside. I'm expecting volatility to start cooling off. Every time it goes to these peaks, it tends to cool off. And the stock market right now is on a trajectory to go higher. I mean, the bottom line is they're going to follow each other. I don't care if two stocks have bad earnings. The next level on the Dow is 32,500, and the Dow is only down 0.17. So this Michiganer crazy market that we're seeing right now, this craziness, it's clearly in the NASDAQ, as you could see here, and obviously some on the S&P because those are S&P stocks as well. Now tomorrow, oh boy, we got durable goods and we have the GDP. I'm looking for consumer spending to be over 1% and for the GDP quarterly to be over 2%. That's the big factor that I'm looking at. And again, we've got earnings that are really going crazy. Now, the majority of companies are outperforming estimates, but with that said, those estimates have been beaten down. And folks, don't go anywhere. I've got my top buy stock and my bottom sell stock today, so don't even think about going anywhere. Let's go through the global economy, and then I'll go through sectors and give you some levels. So global stock market mostly gained Wednesday on hopes that the Federal Reserve might ease off interest rate hikes. Yeah, don't hold your breath. While London opened lower after Britain installed its third prime minister this year. I mean, like, give these people a chance to do their job, right? Parliament, man, Parliament. Maybe we need to implement one here in the U.S., right? The futures for the S&P 500 index declined after a third straight winning day after bond prices rose. That suggests some investors expect the Fed to ease off rate hikes as economy activity cools. If you want to see when that's going to happen, keep your eye on the 2-year. The 2-year is the most sensitive to the economy. And when it stops going up is when we're going to start going down on the 10-year. The yield on the 2-year Treasury fell from 4.50 to 4.45. That's a very strong sign. The 2-year, when the 2-year stops being impacted by this inflationary pressure, that's when it's going to be over. I'm not the only one that thinks this. Paul Tudor Jones said exactly the same thing. If you want to know when this will be over, keep your eye on the 2-year. When the 2-year stops reacting like it's an inflationary market and going up on negative news, that's when we'll know it's over. And also small caps, as I've been talking about, and I'll show you that today too. Traders have become more confident that the Fed will reduce its rate hike plans from 0.75 to a 0.5 percentage point at its December meeting, and I agree with that. They may not even do anything in the December meeting. It may just be a wait and see. They don't always have to do everything, but I think they're going to go to 0.50 or 0.25. I think this is the last 0.75. The U.S. economy contracted during the first half of the year. The government will release its third quarter GDP, as I mentioned, right here. That's coming out tomorrow at 8:30 before the opening bell. So investors are looking at corporate earnings to see how inflation, which is at a multi-decade high, is affecting consumer spending. And it is. Layoffs, bad forward-looking statements, but not everywhere. General Motor rose 3.6% after delivering solid results. UPS slipped very little after package delivery service beat earnings and revenue. Things may be very tough for the shipping crowd because we still have supply chain issues. Now, let me go through my stock fetcher code and show you something interesting here. Now, I always do this in the morning. I show you how many stocks are breaking out of 20-day breakouts and how many stocks are breaking out of 20-day breakdowns. We're at 343 to 70. This is not a hot number. This number can get to 5. It can get to 550, can even get to 600. Now, yes, it is inflated, but the 20-day breakouts is actually not that low. It's not like 20 or anything. So I'm still tempted to believe that this market is going to break out higher, and I'm very interested in seeing how Google and Microsoft are going to trade during the day and whether they're going to brush off what we are seeing right now in the market. Now, also while we're here, I want to show you guys the 11 major sectors and to show you which ones are leading, which ones are lagging. So you got energy, industrial, healthcare, financial, consumer staples. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Honestly, my suggestion is to stay long within these sectors right here. I mean, basic materials is okay too if it's very commoditized or consumer staples or industrial related, because materials and industrial are in the same. So I would go energy, industrial, healthcare, financial, consumer staples, material. Be careful with financials. Be very careful with financials because we're still in an inflationary environment. Now, with that said, today is Wednesday, and on Wednesday, I always give you guys a hot long stock and a hot short stock. So let me show you the stock that I like for the long side right now. I like the Scorpio tankers. I think tankers are going to be doing really well. It's a mid-cap company, or a Russell 2000. It only has a market cap of less than $3 million. It's a deep foreign transportation of freight ship, and I think we're going to be seeing a lot more of that because what they do is they transport petroleum products. And petroleum products, as we all know, are going to be transported quite a lot these days. So I'm seeing more upside from Scorpio tankers. I would go long right around the current level and exit at 55. And if it drops to the 40 level, I would get out. I would give this a little room because it needs a little room to breathe. You may also want to wait for a little pullback, maybe to the 45, 44 level. But I like it here, but I'd love it around the 50-day moving average. I'd really love it around the 50-day moving average. And to the downside, Cuervo. Chips haven't been doing well. This company makes chips for the iPad. Sales for iPad have been going low, and look at what the stock has been doing. Just going in a downtrend. And it right now is coming up right to the 50-day moving average, and I think it's going to come down. Now, I typically love this company, but chip stocks, consumer discretionary technology, they're just not doing as well as they could be doing. So I do believe we're going to start cooling off. We may go a little bit higher, but generally speaking, I think we're ready to cool off, and we're going to be sticking near the bottom. So QRVO is my sell. This price level is good. I would get out right here at 73, about 15 points to the downside. And to the upside, I really like the Scorpio tankers a lot. I think it's a great stock. Plus, look at this uptrend in a bear market, and look at this downtrend in a bear market. But overall, you got to be very, very careful today. I would be watching, if I were you, here's what I would be doing. I would be looking at Microsoft, right, which is right here, and seeing if it starts filling the gap. And I would be looking at Google, because if this thing fills the gap, that means it's already pricing in these numbers, and it's looking ahead, which is what happens when we are in a bear market and starting to get out of it. And remember what I showed you guys yesterday. The Russell 2000 anticipated the bear market almost a year before, and look at ARK stocks, almost a year before the large caps did, and now they're going choppy. So we may be finally starting to get out of this. The fact that these stocks went choppy, and the fact that the bond market went further down, is a very, very strong sign. Look at that. It didn't do that. It stopped here. That's the first time they stopped following. So there's a big divergence now between small caps and interest rates, and that's very, very huge. Now, before I let you guys go, today is the day. Folks, today is the day. Don't forget, today is the big day. I've been waiting for this all year. I'm revealing all the details of my quantum indicator today at 1 p.m. Eastern Time. Now, one of my favorite things about this indicator is this. It can signal long and short trades. I can't wait. I cannot wait for you to add it to your trading toolbox. I mean that. It's perfect for this market right now. A lot of volatility, and it's easy. Green means buy, red means sell. How much easier can it get? Now, during this live class, I'll cover how to download and use this indicator. So tune in today, and you'll also get my #1 quantum stock on Thursday. Oh yeah, like that. See you in a few hours, and click the link below now. Save this training. Save this link. You're going to need it, 1 p.m. Eastern Time. If you don't know where the link is, go to the Wealth Press YouTube channel. Go to YouTube, type in Wealth Press, and you'll see it below the last video, which is this one right here. I hope you have a great day. I cannot wait to see you in my class. Comment below this video, 1 p.m. Eastern Time. It's all happening today. Bye, guys. Take care. Have a great, great day.